Hello and welcome back to the channel. Today, we're diving deep into a stock that's caught our attention on the hard to borrow screener, a company you might not have heard much about, CCTG Technology International Holdings Limited, trading under the ticker CCTG. We're going to break down why it's showing up on our radar, what the numbers tell us, and what these metrics could mean for potential volatility. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight into the specifics of CCTG. CCTG Technology International Holdings Limited operates in the industrial sector, specifically within electrical equipment and parts. This isn't your typical tech darling. They design, manufacture, and sell interconnect products across Europe, Asia, and the Americas. It's a fundamental part of the global supply chain, but with a relatively small market cap of just $3.09 million, CCTG is firmly in microcap territory. What makes it interesting right now isn't its core business, but the unusual activity around its borrow rates. What is cost to borrow and why it matters? So, what does it mean when a stock is hard to borrow? It means there's high demand from short sellers who want to bet against the stock, but limited supply of shares available to borrow from brokers. This scarcity drives up the cost to borrow, or CTB, which is the annualized fee short sellers pay to hold their short positions. Think of it like a rental fee for shares. When this fee gets extremely high, it can indicate significant pressure in the short market. If short sellers are paying exorbitant fees, it suggests they have a strong conviction the stock will fall, or they are stuck in a credit short. Critically, these fees are annualized, so a 676.3% CTB for CCTG means that if a short seller held their position for a full year, they'd pay nearly 7 times the value of the stock in borrow fees alone. This isn't sustainable for long periods. Why this stock is hard to borrow right now. Now, let's look at CCTG's specific numbers that landed on our screener. The annualized cost to borrow for CCTG Technology International Holdings Limited is currently sitting at an eye-popping 676.3%. And it's not just high, it's showing momentum. Over the last 5 trading days, we've seen that CTB jump by a full percentage point, indicating rising demand to short or shrinking supply. The available shares to borrow are incredibly tight. Only 200,000 shares were available at our last check. When you consider CCTG as an estimated float of 3.0 million shares, 200,000 borrowable shares is a very small fraction. Our internal composite squeeze score for CCTG is 45.1 out of 100, which suggests some significant underlying pressure. This isn't the highest score we've ever seen, but it certainly indicates an elevated level of activity within the short market. The stock itself has seen significant price movement recently. Today, CCTG is up 4.60%. Over the last 5 days, it surged by an impressive 41.24%, and looking back 30 days, the stock is up a staggering 88.68%. Chart CCTG 30-day price chart. This price appreciation combined with tightening borrow supply is exactly the kind of situation that can stress short sellers. However, it's worth noting CCTG's volume today was 215,800 shares, which is a tiny fraction of its 30-day average volume of nearly 11 million shares. This low relative volume can sometimes mean less liquidity, which can lead to larger price swings on smaller amounts of capital. Squeeze mechanics explained. So, how does a short squeeze actually work? Imagine you're a short seller of CCTG. You borrowed shares, sold them, and now you're watching the price go up, not down. Your unrealized losses are growing, and to make matters worse, you're paying that massive 676.3% annual fee every single day. At some point, the pain becomes too great, or your broker might issue a margin call. To close your short position, you must buy back the shares you borrowed and return them. If many short sellers are in the same boat, all trying to buy back shares simultaneously in a thinly traded stock like CCTG, it creates a cascade. Their buying pressure pushes the price even higher, triggering more margin calls and forcing even more short sellers to cover. This desperate buying frenzy is what we call a short squeeze. It's important to understand that a high cost to borrow does not guarantee a squeeze. It could also mean that short sellers have incredibly strong conviction that CCTG will eventually fall, and they are willing to pay a premium to maintain their short positions. Dilution risk check. One critical factor that can completely derail a short squeeze thesis, no matter how high the cost to borrow, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically lowers the value of each existing share. For a short squeeze, new shares mean more supply, which can be bought by short sellers to cover their positions, effectively letting them off the hook and negating the scarcity that drives a squeeze. In the case of CCTG, our checks show no recent dilutive SEC filings like -1s, -3s, or 424 BS in the last 90 days. This is a positive sign for a potential squeeze scenario, as it suggests the company isn't immediately looking to issue a flood of new shares into the market. No recent reverse splits have been found either, which can sometimes be a precursor to dilution or simply create an artificial price increase that then fades. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CCTG, key things to watch are continued high cost to borrow rates and further shrinking of available shares. Any significant uptick in trading volume could also be a catalyst. Remember that massive 30-day average volume? If CCTG were to return to those kinds of daily trading levels, the impact of short covering could be amplified. Keep an eye on the fundamental news for CCTG Technology International Holdings Limited as well. While the squeeze thesis focuses on technicals and borrow data, underlying company health always matters. CCTG Technology International Holdings Limited, or CCTG, presents a fascinating case study in the hard-to-borrow market right now. With a sky-high cost to borrow of 676.3% and a very limited supply of borrowable shares, the stage is set for potential volatility. But remember, this is not a prediction, just an analysis of the data. Always be informed and prepare your own strategy. If you found this deep dive into CCTG helpful, please hit that like button, subscribe for more unique stock breakdowns, and let us know in the comments what stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.